What are we tracking? We're tracking an ABC structure in wave W, which bottomed here on the 5th of June. An X wave to the upside, which topped on the 11th of June. There's absolutely no change there. And then the C wave of Y to the downside could be unfolding. Well, the C wave of Y is now unfolding because the Y wave obviously started when the X wave topped, and it's an ABC structure. So A, B, C. The upper resistance held. We can remove it now from the chart. And I introduced an additional resistance area now based on the latest price data that tells you basically the nearest pivot, the nearest resistance area that the bulls would need to break above to, let's say, unlock higher prices or to generate at least a short-term upside turnaround. So the nearest resistance is between 60.9 cents and 63.1 cents. It's a resistance area that is relevant for the B wave. So let me zoom in and explain. So if we really say that this B wave formed the top on the 16th of June, and this is currently my working assumption. I mean, is it a high probability scenario? Not exactly. Not exactly, okay? It just isn't, because we're dealing with possibly corrective structures, complex corrective structures, and then even in this C wave to the downside, an ending diagonal. So we might be dealing with an ending diagonal, which means the third wave is an ABC structure. That is, by the way, one of the pathways I'm tracking on the Bitcoin chart as well. For ADA, I believe this is the best way to count it, which allows for some volatility. Like, for example, this move up could extend a little further. That might be just an extended B wave, not even extended, but like an ABC in wave B before we go down lower. So as long as we stay below the 63.1 cent level, the overall pressure is rather on the downside. Above 63.1 cents, don't think it's super bullish. Just a break above resistance does not necessarily mean it's bullish. It means that, however, the risk for immediate downside might reduce a bit. We would, however, look at the structure then. So if the rally is still corrective in nature, then still a three-wave move up, it might not really be a decisive breakout. If we get a five-wave move up above initial resistance, that's typically the first signal that something is shifting, that maybe the bulls are starting to take the lead. But for now, as you can see, we have a small rally and a pullback. We haven't even broken above any highs. We haven't broken above any Fibonacci levels. So the pressure remains rather on the downside. And I see this now as, maybe a bit of a B-wave bounce, which could extend further, maybe even form a triangle there. B-waves can just be consolidation patterns. Bottom line is, as long as the market doesn't break above 63.1 cents, there is no sign that anything is changing. There is also no need to change the wave structure, scenarios, or anything. And overall then, if this really plays out and the market continues to stay below resistance, it currently looks like that, and we continue to form lower lows and lower highs, then the market might move towards that 55 cent level, which is the 100% Fibonacci extension and one of the key targets for wave C of Y. And that means we need at least, I'd say, 2 more lows would be ideal. Important is, though, to mention, to keep the overall bullish scenario alive, we need to hold the 51 cent level, which is the swing low that was tested again, or previous swing low from February, and then here from April. So these levels ideally hold, or this level holds, to keep the overall scenario of an unfolding Elliott wave triangle, which might break out to the upside, alive. So that's the update on ADA. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.